Hello, everybody, and welcome to the first real episode of Figure Out Your Finances. My name is Marion Kane. I'm the founder of She Means Business. The aim of She Means Business is to help business owners to understand their finances. And we do this through the provision of our Finance Academy, virtual CFO services, and mentoring services. And you can find out more at shemeansbusiness.ie. So today I want to tell you the 5 financial facts that I wish every single business owner knew. The first thing, number 1, is that you don't have to wait until the end of the year or until the tax deadline to find out your profitability or to estimate your tax liability. So lots of business owners I talk to are totally in the dark about their business's financial performance, or they're relying on their cash balance to estimate their profitability until their accounts are prepared or the tax returns are prepared. Tax liabilities are often a significant cash outlay for SMEs, so finding out how much is owed and then having to make the liability shortly afterwards can be really, really stressful. That stress can be avoided. So the first way is that you can measure your profitability throughout the year. So profit is equal to your sales, less your cost of sales, less overheads. Then plus, I suppose, any grant income or anything you might have received, any other income that you might have to include in there. But if you're selling a product, calculating cost of sales can be a bit tricky, but once you have your calculation set up, that can be used forever. So you will know your sales and you'll know your overheads, and you really just need a mechanism for pulling everything together. On the Figure Out Your Finances course, we provide a bookkeeping template so that you can do this on Excel, or you can systemize this process. So you can use a system to prepare your accounts. Whichever way you decide to capture this information, you simply need to have your sales plus any other income, less your cost of sales, less your overheads to give you your net profit. And then you can see if your business is generating a profit or a loss. And then you're able to estimate your tax liability. What's more is that you can project, so say you get to June and you want to know, you're trying to estimate what your liability is going to be for at the end of the year. You can project your sales and your costs as you go out through the year, and then you're able to guesstimate your tax liability based on that estimated profit or loss. You can ask your accountant to help you with this, or you can ask for the help of a finance mentor. But if you're VAT registered, the majority of that work has been done already. You're capturing your activity as you go out through the year anyway. All that's missing is the management accounts piece. And that's what they're called, management accounts that are prepared during the year. Will this be 100% accurate? No, because there's adjustments that have to be made at the end of the year that might not be made during the year, but it's going to give you a ballpark figure of your profit or loss, and you'll be able to estimate your tax liability. And that eliminates huge uncertainty. So you don't have to wait to find out this information. You can have it on a real-time basis. As an aside, you can also have your year-end accounts. So this would be like a preliminary step to get into that point. You can have your accounts prepared in January or February, and know what your tax liability is going to be, and then you have until October/middle of November to gather up the cash to pay that liability. Okay. Suppose for a lot of business owners, the problem is gathering up all the paperwork, but if you can get into it, be disciplined with doing that process, then you'll be able to have your accounts prepared earlier. The second financial fact that I wish every business owner knew is the power of preparing a budget. So a budget is telling your money where to go instead of wondering where it went. And I believe that every single business, regardless of size, industry, or stage, should have a budget. All businesses, you have to prepare your accounts, so you have to summarize your historical and financial information. A budget isn't required, but I think it's definitely best practice. So a budget is where you look ahead and estimate your costs and your sales. It eliminates uncertainty, as I talked about in my first point, where you can get an idea as to whether you're going to make a profit or a loss, or enough of a profit or loss, helping you to make informed decisions about your business, like recruitment, investment, financing, and so on. A budget provides a benchmark for your business's performance. So how can you know if you're not performing as expected if you haven't got a proper expectation? It helps with planning for your business, and it provides motivation for both you and your staff. They are amazing. Budget is so powerful, especially now we're coming up to the end of the year. You know, this is where you can have a clean sheet and you can say, okay, what do I expect to do for the next 12 months? Financial fact number 3 is that cash is king. The whole area of cash flow has been brought to the forefront because of the pandemic. But there's a phrase in business that I don't like the phrase, but it's so true. If you're not making money in business, then it's not a business, it's a hobby. Now, I made no money for the first 2 years I was in business. I just about broke even. I had a long-term plan. So if that's where you are, then that's totally fine. But if you are flat out in your business and you're generating loads of sales and you feel like you're busy all the time, but your bank balance doesn't reflect it, then you need to take a step back and ask yourself why. Cash flow problems is one of the leading causes of business failure. And I've seen businesses of all sizes with debtors ledgers by far in excess of their bank balance. So a debtor is somebody who owes you money. So if you're a business, if you make sales on credit, so you extend credit to your customers, they don't have to pay you straight away, then the whole area of cash is even more important. You need to stay on top of your invoicing, and you really need to stay on top of your cash collection. So making sure that if somebody owes you money, that you're chasing that cash if it's not coming in line with the terms. You also need to keep your personal and your business cash separate, and you really need to understand your business's cash flows. And one way of doing this is by preparing a cash flow projection. So that's where you take your budget, so your expectation for the year, and you tweak it for all your cash flows. Again, we have a masterclass for cash flow management available through the Finance Academy. The cash is king, and if you are not generating cash in business, then you need to ask yourself why. The fourth thing that I wish all business owners knew is that there is a way of analysing your pricing. I call it the 5 factors of pricing, and it's basically a system for reviewing your pricing. Pricing is so relevant at the minute because the cost of everything is escalating, and the better you understand your costs, the easier it is for you to price your offering. Very often we tend to underprice our products or services, and we definitely tend to undervalue our own time. So you need to think about all your costs, not just the direct costs associated with the products or services, but all your overheads. And then also for your own time, think about the money that you would earn if you were to go and get a job. Some business owners price their offerings based off their competitors. And this is one factor, but it shouldn't be the sole determinant, because every single business is different, has different cost base, and has different values. It's got a different way of doing business. So while you need to keep an eye on what your competitors are doing, your pricing shouldn't be based entirely off them. Again, pricing has a huge impact on profitability and the success of your business. So it's really important that you get it right and that you're happy with it. And by doing the pricing analysis that we offer, you are able to pull together facts and figures which supports your pricing and kind of gives you just like that bit of confidence to stand over your pricing. The fifth and final fact that I wish every single business owner knew is the importance of a pension scheme and talking to a financial advisor. Before I go any further, I want to just caveat this advice because I'm an accountant, I'm not a qualified financial advisor. But part of the reason I focus in She Means Business, we focus on supporting women is because we want to help bridge the gender pay gap. The gender pay gap currently stands at 14% and in Ireland, and the gender pension gap is a massive 37%. Part of this is because there is also a gender gap when it comes to financial literacy, so understanding the area of finances. In business, I often compare the circumstances of a self-employed person to those of an employee. Very often in employment, your employer will look after your pension scheme. In fact, the Irish government is currently planning a pension auto-enrolment for employees, meaning that anybody who's in employed work will have a pension scheme. Yet, it's something that's often put on the long finger by the self-employed, and that's to our detriment in retirement. Not everyone knows that there's tax relief in Ireland for making pension contributions, meaning that you can actually lower your tax liability and provide for your future by making pension contributions. There are rules in place. But my advice is to speak to a financial advisor as soon as you can. I'm an accountant. I'm supposed to be well informed of these things. And yet when I left my corporate job and our first son was born and we talked to a financial advisor, he told me all the financial perks that I had left behind. Speaking to a financial advisor was one of the best things we ever did because it helped us to put some protection in place for ourselves. I didn't have to go back to my old job to get that protection. We did have to have the discussion, and it was intimidating to talk to someone about our finances. And let's be honest, we had a new baby, I had a new business, finances weren't great. It was something we just had to do. And for a lot of financial advisors, the initial consultation is free. So you can have a discussion and tell them your circumstances and just kind of get a feel of whether you can work with them or not. But it's just kind of taking that first step. So that is my final piece of advice today, is to speak to a financial advisor as soon as you can. And remember that pension contributions can help to lower your tax liability whilst also providing for your future. So definitely, as soon as you start paying tax, start thinking about your pension scheme, if not before. So that's the 5 things I wish that every single business owner knew, and I feel so happy for having got that off my chest. Thank you very much for listening. I hope you found it useful. If you did, please feel free to leave me a review or share. And the more, because I do believe the more people who know these things, the better. Thank you. If you'd like to find out more about how She Means Business can support your business, visit shemeansbusiness.ie. You can also find us on Facebook, Instagram and LinkedIn. This podcast has been written in general terms and therefore does not constitute professional advice. Application of the principles set out will depend on particular circumstances, and it is recommended that you obtain professional advice before acting or refraining from acting on any of the content of this podcast. To the maximum extent permissible by law, Marion Kane, trading as She Means Business, accepts no duty of care or liability for any loss occasioned to any person acting or refraining from acting on any of the content of this podcast.